They want to settle so badly. They don't like what we're doing. And they do want to settle. We'll find out whether or not we settle with them or we just finish it off.
President Trump is reiterating that Iran wants a deal, even though Tehran has not publicly expressed any such desire. Risks are mounting in the Strait of Hormuz as both sides continue to launch attacks. Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. AI chip stocks are leading a sharp sell-off across Asia. The Kospi plunged as fresh concerns of evaluations and higher ASML prices hit sentiment. Oil is extending its rally after the latest U.S. strikes on Iran. The IEA chief says the global economy faces big risks if disruptions in the Strait drag on. Manulife Investment Management senior global macro strategist will assess the risks investors may be overlooking as tensions in the Middle East persist. And also ahead, India is turning to overseas Indians to help boost forex reserves and support the rupee. DSP Finance Vice Chair and CEO Jayesh Mehta on whether the plan can deliver. Top story today. The U.S. has launched airstrikes on Iran for a fifth straight day. It comes after President Trump pledged to intensify the bombardment until Tehran stops attacking ships in the Strait of Hormuz and agrees to open the waterway. The U.S. military said it hit missile storage and launch sites on Greater Tub Island in the Persian Gulf near the Strait. Later in the day, Trump announced on Truth Social that Iran had freed an American woman who had been detained since December 2024. He praised the Islamic Republic for this gesture of goodwill. International Energy Agency Executive Director Fatih Birol is warning that the global economy will face difficulties if the conflict that's choked the Strait of Hormuz isn't resolved soon. Speaking to Bloomberg at Aspen Security Forum in Colorado, Birol discussed the uncertainty markets are grappling with right now.
The markets are nervous whether or not there will be a soon and lasting solution to the problem. And at the same time, many countries are taking some measures to avoid the worst case scenario.
Talk about those measures. What are they doing exactly? We've seen them drawing from supplies, obviously, on an emergency basis over the course of this.
There is a few things. First, we see that some countries using their inventories, their stocks, such as China and some other countries, number one. Number two, we see that the production, oil production increases significantly from United States, from Brazil, or from Kazakhstan and elsewhere. Number three, it is noteworthy that the Saudi Arabia is making heroic efforts, as well as the United Arab Emirates, to through bypassing the Strait of Hormuz to bring the other coast of the region. All of them are good, but none of them are endless. Therefore, I hope the crisis will be solved quickly and in a convincing way. Otherwise, global economy may well hit some difficulties.
I hear you use the word hope, and I wonder how optimistic you are, indeed how worried you are about where we are now over the last 24 hours.
I am always worried. In fact, I have always thought, at the IEA, we always thought, what could happen if one day the Strait of Hormuz is closed.
You've thought through this many times.
Many times. We made some exercises and so on. And it is the reason, one of the reasons that we released a huge amount of stocks to the markets in a seamless way, which brought the oil price to $20 down. And now the problem is, once it is closed, many people think it may be closed again. So countries are now thinking not only what kind of measures they can take today, but how are they going to develop their energy strategies for tomorrow.
My understanding is the IEA has about 25% left of those reserves to release. Is there, what's the latest thinking on when you might have to deploy those again if this were to drag on?
So when we release our stocks, first of all, it was a historic 400 million barrels. which is equivalent to today, every day, almost 2.5 million barrels flowing to the markets, comforting the markets. And this was a historic, because never, ever we released so much stocks. And it was a unanimous decision, all of our member governments. And this was only 20% of the stocks we have. Still, I have the 80% in the pocket. If and when needed, our member countries, I am sure, will be happy to release those stocks. But I very much hope, again hope, that we will not come to that point.
International Energy Agency Executive Director Fatih Birol speaking with Bloomberg TV's David Gura. Now, oil prices are rising for a fourth day as traders continue to monitor the tensions in the Middle East. Chip stocks, meanwhile, are tumbling in Asia, tracking U.S. losses. Let's check in on how markets are faring with Avril Hong. And Avril, the sell-offs seem to be gaining momentum.
Absolutely, Has. I mean, we see the Asia tech sell-off resuming today, although I would just highlight when it comes to Chinese internet names, that's helping to prop up the Hang Seng, following on from Apple gaining approval for iPhone AI in China. But you look at how the Kospi is faring, it got so bad at one point that the circuit breakers were rolled out and flipped the board because, unsurprisingly, the culprits behind this are the chip stocks. Heavy losses today, tracking the selling that we saw in the US. And it's worth noting that this was despite ASML beating and raising the outlook. And this mirrors the negative market reaction that we got following on from solid Samsung earnings as well as TSMC's monthly sales numbers. So this really tells you how high the bar is for TSMC earnings later today. And then, of course, what didn't help was really comments from the South Korean finance officials, right? One of them talking about how they will announce soon these measures to maybe address the controversial single stock ETFs, those linked to Samsung Electronics and SK Hynix. And of course, as some of our colleagues have been highlighting, even though we don't have the details on that just yet, given how much money has already come into these ETFs, it's absolutely crucial that this is handled with care. As our colleague Mark Cranfield put it, the ETF genie has already been let out of the bottle. And of course, out of Korea today, we had the BOK hiking for the first time since 2023. The headlines we're getting from the flip the board back, please, and just take a look at that chart that we're still talking about. When it comes to the headlines from the BOK as well as the governor, it seems to suggest a higher terminal rate because they see persistent price pressure. So this gives you a sense of how maybe that repricing might be underway. The Korean won recovery, that could be helped as well. And you take a look as well at what you're seeing on the options curve. Maybe this could prompt that normalization given how the 1 month has been sitting above the 1 year's implied vol since the war began. Now, let's take a look at that repricing also underway when it comes to treasuries. Certainly, we've been seeing that this week on the front end of the curve, which at one point surged to 4.28 on the 2-year yield and then reversing back down to where it is now, thanks in part to what we're getting from these U.S. inflation prints, both CPI, PPI, and to some extent, the comments from Kevin Walsh as well. Traders are paring back those bets of a Fed rate hike. But given these latest flare-up intentions in the Middle East, you also get the sense that, that data is not accounting for what could come. And think about as well how traders are still pricing in a hike before the end of the year. Although when it comes to the curve steepening, there is a little bit of a sense that that could extend.
And Avril, is not just about the Fed and geopolitics now. It's also about trade and tariffs. We're getting some headlines out of the U.S. The U.S. To impose 25% tariff on some Brazilian goods from July 22nd. It will, though, exempt beef, coffee from the 25% tariff on those Brazilian goods. Of course, this is under the USTR Section 301 action on Brazil's unreasonable acts, policies, as well as practices. Again, we're back worrying about tariffs now. The U.S. imposed 25% tariffs on some Brazilian products from July 22nd. Now, let's get more on markets and the implications of all of that with our guest, who thinks the Fed will stay on hold for the remainder of the year. Yuting Shao is Senior Global Macro Strategist at Manulife Investment Management. Yuting, good to have you with us. Now we're back worrying about tariffs on top of geopolitics and the Fed. What are you making of the macro environment at this moment?
So in our opinion, all the things you've been mentioning and we'll be hearing for this week, it's likely to be a fixture for the remainder of the year where, geopolitics will continue to have impact on macro and markets alongside with uncertainties around policy and trade as well. And I think it's important to focus on the flip side of that is where we're still seeing a relatively resilient global backdrop when it comes to growth. Of course, a lot of it has been supported by the AI supercycle that we're still currently in, not only in terms of the asset performances, but also in terms of the overall export-oriented economies that are still benefiting from the cycle that we're currently in.
Can the environment remain resilient if oil keeps creeping up, currently in excess of $85 a barrel?
Yes, that's a tricky backdrop to navigate if we were to extend this period of uncertainty, especially if oil prices were to moving higher. A lot of the calmness we've seen in the market over the past few weeks, notwithstanding what's been happening over the last few days, perhaps, has been this relatively more confidence on the conflict eventually easing off and impact on energy prices and its overall impact on global inflation start to reverse. But of course, the longer we have this uncertainty weighing on energy prices and inflation, the higher risk eventually it will have impact on growth and even risk of a bit of a nonlinear impact throughout other parts of the economy.
So you think on the back of all of that, how are you positioning for the next 12 months?
So in our opinion, we need to be very balanced and nimble when it comes to how we're thinking about the global asset allocation views. We're still believing in the U.S. story. Growth is still very resilient. That's on top of the support from the OBBA government spending, but also for the investment side as well. Consumers so far still remain to be quite resilient. The data we got over earlier part of this week on CPI and PPI tells us the price pressure so far seems at least manageable. There's not a massive urgency to make radical moves on rates just now. For the rest of the world, we're still liking the economies potentially are benefiting from the AI-related exports. And those are the places we are still have a very positive outlook on.
So if you're still positive AI and you're still positive AI capex, doesn't mean that the sell-off is a buying opportunity. Would you be buying?
So I think there's a time horizon in mind. What we're seeing right now is very much higher volatility, at least for the near term. In our opinion, it is important to stay cautious and to really assess what's been happening, especially given the magnitude and the speed of the rally surrounding AI that we've seen for better part of this year. But of course, over the medium to longer term, to your point exactly on the AI capex, not only for like the semis, but also the energy infrastructure, but also the spillover to broader economy when it comes to more investment and ultimately supporting growth, that story still holds in our opinion.
So in terms of where to play the AI and chip story, would it still remain Korea? Or might you be looking at China now that China's looking at adding memory capacity?
So we think it's important to note that where Korea has been going, again, to the magnitude and the speed of the rally for the very near term, we think it is healthy to see some correction, especially given a lot of the volatility has been coming from the leverage ETFs. So those for the very near term have led to the volatility we've seen, and some correction and consolidation around these levels is a healthy backdrop for that to continue its over the medium to longer term uptrend. For the broadening out theme to other parts of the market, including China, China interestingly haven't been catching catching up as much when it comes to AI rally. So to your point exactly is that given the potential there could be some upside when it comes to the AI aspect of things for China market.
It has been a roller coaster ride for Korea. In fact, currently the Kospi is down about 5%. How much more downside do you think would be enough in terms of the correction needed for Korea?
So I think where we are right now, we still need the volatility to come off, potentially a little bit more when it comes to the adjustment period. Also, I think one thing to note is we are entering the earnings season, where to the early reporting, we know expectation is still very strong when it comes to the earnings outlook. And a caveat to that is it's very high bars to clear at this point, where if you beat or meet the expectations, you may or may not get rewarded. But if you miss those lofty expectations, you're likely to be punished. So it's very important to stay nimble and stay cautious at this point, especially considering we are entering summer season where liquidities will start to ease off a bit as well.
Yuting, what's your view on Japanese chip-related stocks? They've been leading losses as well.
Yeah, so the Japan story, broadly speaking, has been quite positive for the past few months, starting last year, given we have the Takaichi government, which is very pro-growth, pro-fiscal, and the relatively more positive story on the corporate reform side of things is also helping the overall more positive outlook on Japan equities, that we stay positive when it comes to our views for the Japanese equities. But of course, a lot of the adjustment right now we've seen with the tech-related stocks is where you have volatility start to creep up. Globally related theme stocks will likely to see adjustments as well. But then again, that is the near-term fluctuations, which is a healthy consolidation, but it doesn't really at this point massively change our longer-term views towards those markets.
You think quite interesting to note that by most metrics, stocks are looking cheaper at this point in time. In terms of how you're looking at your portfolio, in the next 6 to 12 months, how should that be looking?
Yeah, so I think the AI theme, again, will be a key focus. You might see some rotation potentially from the more semis hardware towards the software. Of course, a lot of this implementation and monetization eventually will start to be more of a focus when it comes to market focus because you need to have justifications in terms of the very strong capex of the hyperscalers we're seeing and continue to expect.
And also, the U.S. remains a key market, right? Given that expectations for Fed hikes is easing pretty much, given the soft print that we saw recently.
Yes, that's very much in line with our view for the Fed call, which is on hold for the remainder of this year. Of course, we are still very closely monitoring the incoming data, but what we believe is the prints we get in terms of the relatively weaker non-farm payroll earlier this month with the downward revisions for previous prints, alongside with the relatively more steady, sequentially slowing CPI and PPI data, does give the Fed a reprieve in terms of a more time to assess the overall impact to really balance the dual mandate of the labor market versus the inflation outlook.
And Yuting, final question, any risk that's being underpriced at this point in time?
So we believe there is still uncertainties around geopolitics, and to some extent, I think market potentially has been underestimating the duration and the impact on market. Of course, the prices of the past few days have been telling us that market is potentially starting to pay more attention on the lack of immediate resolution and what that means for energy prices and global market performance. But we do believe the longer this conflict goes on, the more likely there is going to be impact on market where you start to see cracks forming on parts of the market potentially has been overlooked.
Yuting, thank you. Yuting Shao, Senior Global Macro Strategist at Manulife Investment Management. Now, still ahead this hour, we'll hear exclusively from U.S. Trade Representative Jamieson Greer, who says China is allowing rare earth exports to flow, but its compliance with trade commitments remains far from perfect. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. U.S. Trade Representative Jamieson Greer says stability for trade ties with China remains a top priority ahead of the expected visit of President Xi to the U.S. in September. Greer says Washington will take stock of Beijing's commitments during the summit. He spoke exclusively to Bloomberg TV at the Aspen Security Forum earlier.
So China's compliance with the rare earth elements of our agreements, it's not perfect. I think everyone knows that. You can read that in the paper. That being said, we are getting a flow of rare earths. We don't have factories shutting down because they don't have it. But again, we really want to be in a position where we were, in 2024 and 2023 in President Trump's first term, where we had a regular flow of rare earths. We also know that the Chinese, they use rare earths for economic coercion. They did it in 2010 and 2011. They're doing it now, so it's not necessarily surprising. But we're continuing to have some flow, and where we have gaps, where we have problems, the Secretary of the Treasury and I, we work with our counterpart in China to try to loosen that flow up. Sometimes we're more successful than others. One important thing is we're moving forward in the U.S. on rare earth production. One of the things I'm doing on my trip out west here, I'm going to Utah to visit a facility where they've discovered rare earths in the Utah desert, and they're refining them and further manufacturing them at a facility in Utah, which is a great development for U.S. national and economic security.
You've got rare earths. There's huge pharmaceutical dependence as well. And I wonder how you're thinking about that, the way that you can kind of curb our reliance on Chinese pharmaceuticals and ingredients.
Yeah, we think about this a lot. This is really critical, because at the end of the day, if somehow you lose access to Chinese inputs, it can be a huge challenge for our own manufacturing base. And some people will say, well, what about India? Fine, but a lot of the inputs that India uses also come from China. One great thing that we're seeing as we try to encourage companies to reshore is we actually have commitments from 17 pharmaceutical companies, the largest and the most major pharmaceutical companies, not only to lower prices of medication here in the U.S. Pharmaceutical prices have gone down by 2.5%. But they've also agreed to reshore here and to manufacture here. And so we have companies like Eli Lilly and Novartis and others actually pouring concrete and superstructures going up in new facilities in North Carolina and Indiana and Southern California.
There's a long way to go until this meeting in September when the Chinese president comes to the United States. But let me ask you lastly, sort of how you're thinking about that. You were so integral to the conversations that took place in Beijing. What are you expecting, deliverables-wise, to come out of that meeting in Washington in a couple months?
Well, the number one deliverable we always have between President Trump and President Xi is to continue the stability of the relationship. Both of these leaders are very committed to having a strong and solid personal relationship. Now, that doesn't mean we don't have issues in the broader relationship. Obviously, we do. China is a big challenge for the U.S. in a lot of ways. But we want to make sure we're delivering stability. There's never been a situation where the U.S. side or even the Chinese side has gone out and said, everyone should expect a comprehensive agreement that resolves all issues. Like, no one's ever promised that, so that's not what we expect. We will have an opportunity to take stock of Chinese commitments with respect to purchases of soybeans and other agricultural products. We'll take stock on the rare earth issues we decided. So I think it'll be a moment for stock taking, confirming the relationship, making sure that China's complying with what it's agreed to do. That's really what we're looking forward to in this meeting.
Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. We're keeping an eye on the rupee after India asks state-owned banks to intensify efforts to garner foreign currency deposits from the country's 35 million-strong diaspora. The move comes as New Delhi seeks to boost its external buffers and shore up the local currency. For more, let's bring in our India Money and Power reporter, Siddhi Nayak in Mumbai. And Siddhi, tell us more about why the government has made FCNR deposits a priority. Why now?
Thanks, Haslinda. As you mentioned, the rupee has come under significant pressure against the dollar because of the war in the Middle East. That has consequently put pressure on India's forex reserves, which is why the government and the RBI in unison want to bring these dollar inflows back in the country. One of the schemes that has been introduced is the FCNR scheme, wherein the RBI has introduced a concessional swap window to subsidize the hedge cost of for banks for getting these flows inside the system. What this helps right now is that it protects the currency for the banks and lowers the deposit cost for these banks. What has happened is that these higher flows can help improve India's external buffers without relying on the volatile portfolio investments. That also helps get in a lot of dollars in the country, helping stabilize the rupee. Analysts and bankers are expecting FCNR flows to be anywhere to the tune of $50 billion to $80 billion. That would help stabilize the macros of the country.
We're talking about banks offering pretty unusual high returns on these deposits. The question really is why?
So in this case, compared to 2013, the RBI is absorbing the hedge cost for banks under this special swap window, which is lowering the cost of dollar deposits for these banks. Because the RBI is absorbing the hedge cost, banks can now offer and pass on these higher rates to consumers and the NRI depositors so that they're able to put in and park in a higher sum of their dollar deposits in the country. Basically, some banks, the smaller ones, are offering rates as high as 7.5% on these deposits. This is a substantial premium to what any investor could perhaps earn on a US Treasury investment or other asset classes, which at this point are super volatile. The aim is to maximize these flows by intensifying the outreach to the NRI, the diaspora, as you mentioned, so that the inflow of deposits in the country, the inflow of dollars in the country is significantly high. The government and the RBI are working with banks to intensify outreach to the diaspora. The government, in a recent meeting with state-owned banks, had asked and urged these lenders to push their efforts to intensify these dollar deposits into the country. They've been asked to actively engage with the diaspora, increase the outreach to these diaspora through social media campaigns and marketing and advertisements, as well as leverage these flows through Gift City. Now, banks have already said that they have seen a lot of interest from the diaspora, not just from the Gulf region, but also from the UK, the US, the Singapore, and Hong Kong. So the outreach is expected to, make these consumers aware and the depositors aware about what these dollar returns could give them, how their returns could be compounded, and not just because of the rate, but because of the leveraging opportunity that this scheme now promises.
Siddhi, thank you. Our India Money and Power reporter, Siddhi Nayak in Mumbai. Let's get more insights from Jayesh Mehta, Vice Chairman and CEO at DSP Finance. It's a non-banking finance arm of the DSP Group, and the company deals in structured lending as well as loans against mutual funds as well as shares. Jayesh, good to have you with us. We heard from Siddhi earlier. There's been a lot of interest. Do you agree?
Yeah, of course, there is a lot of interest. Of course, one is the headline rates, what the FCNRB will pay, which will be like, mostly for the Indian banks would be around 6.5. Some smaller banks would do 7.5. But foreign banks will still give 5%. But the trick and the interest is not really just on the vanilla one-time FCNRB deposit, right? I think it's the leverage which will be done through the offshore arms, which will effectively get something like 12 to 14% return to NRI on this principal. So that's where the game is, and that's where I think we will see a lot of flows coming in through the leverage FCNRB deposits situation.
I guess I'm wondering why the government is going this route, why the NRI deposit routes as opposed to other options. Has the macro backdrop changed to push the government to take this course of action?
So if you really look at it, last year we had a lot of capital outflow, and that I think is still continuing. And and that added with the war really had a more capital outflow coming, equity outflows going from the country, and that was putting pressure on the currency. And this at least, $50 to $75 billion is what people are expecting. If government gets, the banks and the public sector also are allowed to borrow in the ECB and the subsidized forward premia, they would actually be able to get, say, $50 to $75 billion. The way the reserves accounting works is on cash basis. So this will be immediately added as soon as whatever RBI absorbs the dollar from the system. It will be added to the reserves, and that will show some strength. That will show some strength to the reserves, and therefore it will at least give a temporary respite to the currency. And of course, this kind of huge flows will definitely benefit for some time. But we have to see that whether the equity outflow continues or it continues to go out or it stabilizes.
Jayesh, is it wrong to think that perhaps India is building up its FX buffers in anticipation perhaps of greater global volatility?
Yeah, there has been global volatility, and let's be very clear, we are open on the capital account, and capital flows because of the global geopolitical and because of the global thematic changes, capital flows can be volatile, right? And because we had this kind of buffer, unlike 2013, we were really a little bit more troubled, but this time around we have comfortable buffer, and so basically we are adding more to just manage the capital outflow, if any. As far as the trade flows are concerned, we are very good on that. That should be that's not a real problem. I think the main problem is the capital outflow, and therefore we need to be prepared for, if it continues, we need to be prepared for that.
And of course, you said earlier that it remains to be seen whether or not the currency will be well supported. What are your own expectations? What might the impact be? What would that take?
So I think broadly we will get, say, 50 to 75 is what people are expecting. Both FCNRB deposit plus PSU borrowing plus OFCCB with the banks can also borrow. Along with that, even foreign banks would also can bring in large FCNRB deposit because of pure arbitrage, which is available on the table of 150 basis points. So that also would be coming in large way. So assuming $50 to $75 billion we get in, there is immediate reaction. The thing would be appreciating a little bit of dollar rupee. We do think that dollar rupee can go back to 92, 93 in the short term. Going forward, the way it will function is how far effective their RBI intervention is, A, and secondly, what happens on the equity outflow. It's almost like $200 to $300 million daily equity outflow has been there almost 80% of the time since last 1 year. And of course, the West Asia war actually created more outflow. But even without the war, you have almost like $200 to $300 million daily outflow. So till that time that is stabilized, we need some more ammunition, and which is what RBI has created that more ammunition for.
Well, the thing is, rupee weakness has a lot to do with USD strength as well. So I'm wondering whether or not there are limitations to all these inflows supporting the currency.
I do agree, when you say headline dollar strengthening and the other currency weakening, but if you compare ourselves with, say, any of the euro, sterling pounds and all of that, we have really depreciated. And I think the onslaught on the capital outflow was really huge. And that's what, for whatever reason, the outflows were there. That's real. Though I don't agree that it's basically people are getting, equities are going out because of AI story and all that. But there is an outflow, that's the reality. And that outflow, we hope that could taper down a little bit. Well, unless, even if it is tapered down, we don't even need inflow. But unless it tapered down, we will have to create some buffer, and that's what RBI did, to have that buffer. So I think it's more about not really the dollar appreciation. Of course, dollar appreciation we should depreciate, but not the kind of depreciation we have seen, right? Like from 84 to 95 in 1 year, it's really, really largest depreciation I've seen in currency ever.
And before we let you go, Jayesh, for the banks themselves, I mean, do you see them aggressively fighting for the NRI deposits? And could that necessarily mean higher funding costs for them?
No, so there are two types of situation which is going to happen. So foreign banks will be going for arbitrage, so they will be paying FCNR deposit range around 5.25, but maybe they will give more leverage, so the individual depositor would get maybe 12 to 14% return. And they would actually, therefore their borrowing cost would be 5 to 5.25, and they will be deploying into buying some sovereign bonds and stuff like that and making an arbitrage there. As far as the Indian banks are concerned, maybe they would try to leverage it, of course, a little bit lower, but their effective cost would be 6.5%. Now, at 6.5%, if you're getting 3-year money to 5-year money, it is great from your asset liability management, from your liquidity coverage ratio. It is also, this money is without any CRR, which is the statutory ratio for cash reserve ratio, and statutory, liquid ratio. Both have been completely exempted in this situation. So at 6.5% for Indian banks who have business to disburse, their ALM management, this would be a great long-term liability to create.
Jayesh, thank you so much for your time today. Jayesh Mehta, Vice Chair and CEO at DSP Finance. And we have some breaking lines from Brazil, responding to, of course, the U.S. planning to impose 25% tariffs on some Brazilian products. Brazil now says it will immediately begin the procedures required to invoke the instruments provided for under the reciprocity law, unanimously approved by the National Congress, and will pursue the matter through the World Trade Organization's dispute settlement mechanism. Of course, again, Brazil will take immediate action on the back of that. We had the U.S. saying that it will begin charging a 25% tariffs on imports of certain goods from Brazil following an investigation alleging that the country engaged in unfair trade practices. Imports of beef, coffee and certain ethanol products would be exempted from the new duties. Brazil responding to that, saying that it will challenge what the U.S. has said it will do. It will do so via the WTO. And still to come, Indian billionaire Gautam Adani denies that his pledge to invest in the U.S. played a role in the Justice Department's move to drop criminal charges against him. We have details coming right up. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, and here's a look at the market open in India on a day when the rest of Asia pretty much under pressure. Chip makers, by the way, leading the pack lower. Sensex, though, from the get-go in positive territory, up about 1%. The other benchmarks also in positive territory. Brent crude inching up for a fourth day in a row near $85.50 a barrel after the U.S. launched fresh airstrikes on Iran. That's not impacting sentiment in terms of the Indian rupee. 96.23 is the level we're looking at, pretty much flat versus the USD. We're also keeping an eye on Adani stocks after Gautam Adani says his proposed $10 billion investment in the US had nothing to do with the Justice Department's decision to drop criminal charges against him. Bloomberg senior reporter for conglomerates PR Sanjay joins us now with more. And Sanjay, what are the arguments by Gautam Adani? What has he been saying?
So the Indian billionaire Gautam Adani told a federal judge on Wednesday that his pledge to invest in the US didn't play a key role or a critical role in American prosecutors moving to drop criminal charges against him. Some context here, US district judge who was presiding over Adani's case had pressed Gautam Adani for more information after the Justice Department said in May that it has decided not to devote further resources to these criminal charges. Adani and others aware that were accused by US prosecutors in late 2024 of a scheme to pay more than $250 million in bribes to Indian government officials to lock solar energy contracts, which allegation that has been consistently denied by Adani Group. Gautam Adani clearly said he was not aware of anything promised, offered, sought, received, agreed to or accepted by anyone in connection with the dismissal, and denied any knowledge of any agreement involving an exchange of anything of value of dropping the criminal charges. That is his argument, Haslinda.
Sanjay, is it impacting his group?
That's a great question. In fact, he's ramping up his capex program to give some perspective. Late June and early July, in 1 week, Gautam Adani has announced nearly $15 billion in investment commitment across port, mining, and flagship business. Adani Enterprises, the parent of Port Power Group, have sized its share sale by 50% to 150 billion rupees, and which witnessed the marquee American investors like the Capital Group, Goldman Sachs, INC, and Vanguard INC, and BlackRock, etc. And in less than a day, it has also announced investment with IHC, International Holding Company, to invest $11.5 billion in an aluminum project in Eastern India. And one more thing, last but not least, Adani Ports and Special Economic Zone announced a $1.4 billion deal with MSC, the Mediterranean Shipping Company, in return of a 49% stake in its transshipment port terminal in Vizhinjam in southern state of Kerala.
Pierre Sanjay, Bloomberg senior reporter for conglomerates. Thank you so much for that. Now, staying on India, where Kerala remains committed to expanding Adani Group's deep water port in the state, despite objecting to a proposed stake sale to Swiss shipping giant MSC. The state's chief minister, VD Satheesan, spoke exclusively with Bloomberg and says the state is acquiring more land for infrastructure.
Vizhinjam port is improving. Their progress report is good. They are doing well. And we have to start the export also. I think within 1 month they will start the export also there. And the recent issue is that they entered into an MOU with one international company, MSC, Mediterranean Shipping Company. They are subsidiary. They are going to sell their stake 49%. We are the owner of the Vizhinjam ports, the government. They are the concessionaire. So in the concession agreement, there is a provision with the prior approval of the authority. Authority is the state government. They can sell their stakes. So they approach the government. Now, they have submitted a letter. And there is an empowered committee under the leadership of the Chief Secretary of the State, the Cabinet, entrusted the empowered committee to check whether it will affect the state interest. There are 2 points in the concession agreement. One is the strategic position of this Vizhinjam port. That is the security reasons. It has to be considered by the Government of India, MHA, and the Shipping Ministry also. After getting approval from the central government, we will go through that. Our only problem is that there should not be any monopoly by this new company. But it is protected in the concession agreement also. There is a provision in the concession agreement that there should be common user facility. No monopoly will be allowed. But we will go through that.
They have anyways assured you so that that is the case.
Yeah, they have given the guarantee also. They won't do that. And it is protected in the agreement also. After the study by the empowered committee, we will take a decision. On the basis of the state interest. Main thing is state interest. These are all controversies. We didn't have any idea that they were having discussion with the MSC. But we came to power only a few days back.
Yeah. But it raises a larger question. Because of your objection, there have been some doubts now about the future of the project. The state government remains committed to the project?
No, we have not made any objection.
Yeah.
We expressed our dissatisfaction that before sending the letter to the SEBI, they had to inform the state government. Yeah. But within 24 hours, they informed the state government, they submitted their letter. After 2 days of span of 2 days, they submitted another revised letter also. That's not a problem. That is only a simple problem.
But the state government remains committed to the project.
Definitely we are committed. We are the owner of the port.
Yeah.
We are the owner of the port. They are the concession party.
Yeah. So
they are the concessionaire only.
You're committed to the port.
Definitely we will commit to the port. It has to be expanded outside the harbour also.
There's been a change of government. This port was inaugurated during the previous government, which is of a different political party. When global investors are looking at Kerala, should they be worried?
No. There is no need of any worry because at the time of Ummanchandi, when he was a chief minister, we started it.
Yeah.
Then the next government continued it. Yeah. But unfortunately, they could not complete it in 2019. Extended another 5 years, 2024. They inaugurated. I have, as a leader of opposition, I have attended the programs also. Yeah. Then we made all support to the port. Port should be the major development in Kerala. Other activities, we have to make other activities also.
So the global investors need not be worried because especially in this case, MSC is also involved.
No, there is no controversy at all. No controversy at all.
Yeah.
The media is making all the controversies. Yeah. Media is making. Some of the medias are making controversies every day. Nothing. There is no issue. We are inviting investments. We are doing the exercise of inviting the investment to Kerala also. Yeah. Now the Tata is ready to invest on shipbuilding. We are going to provide the land to the Tata group.
Okay.
For investing for 10,000 crores investment for shipbuilding. Many other companies are coming. Many other companies. Yeah. The vessels, cruise vessels, river cruise.
And the Tata one, what does it involve? The Tata proposal?
Tata's proposal, it is 10,000 crores proposal.
Yeah.
We are discussing on that. It will be finished within 1 month.
Okay.
After 3 months, there should be delivery in this area.
Yeah.
The discussions are going on with the various companies.
Yeah.
In some of the cases, we want to make some expression of interest.
Yeah.
For that, there should be some procedure also.
And that was Kerala Chief Minister VD Satheesan speaking exclusively with Bloomberg's Uni Krishnan. And before we go, here's a look at tomorrow's show. For our weekly India Focus segment, we'll be speaking with India's former Agriculture Secretary, Siraj Hussain, on how the monsoon season this year might impact the country's economy. And that is it for Insight. Horizons Middle East and Africa is up next. Keep it here with us. This is Bloomberg.